biggest issue facing the prime residential property market is taxation, with two of the main political parties favouring a mansion tax on properties worth in excess of £2 million. We've already seen increases in stamp duty, the closure of certain tax loopholes and the threat of further taxes slow the prime markets both within and outside of London. If mansion tax proposals are not introduced, there's every prospect that drivers of demand in this sector mean that price growth is restored in the period after the election. In this scenario, we're forecasting 5-year price growth of around 23% in the prime markets. To understand the implications that the introduction of a mansion tax might have, it's important to appreciate the likely scale of such a charge. The Labour Party have aspirations to raise £1.2 billion of tax receipts by setting fixed charges for properties within certain ranges of value. The tax will be progressive, with the most valuable properties contributing the most. Labour have already stated that properties worth between £2 and £3 million will pay no more than £3,000 per year. The charges for the more expensive bands have not yet been announced, but we estimate that in order to raise £1.2 billion, the tax charges for properties between £3 and £5 million might be in the order of £7,000 per year, rising to £125,000 for properties worth over £20 million. We believe that the impact of pricing will vary depending on the value of the property and if it's in London or not. Prices could fall by as much as 10% in 2015 in London's £10 million plus market, where the charges are the highest, but we believe these markets will bounce back strongly in 2017 as the market absorbs the changes. In the £2 to £3 million market, where proposed charges are lower, we believe the initial fall in 2015 wouldn't be as large, but the bounce back is unlikely to be as strong as this price bracket will continue to be affected by the 7% stamp duty. Some of this impact is likely to trickle down to the £1 to £2 million price band, although we believe this market outside of London will benefit as homeowners in London who want to avoid the charges but need more space will make the move out. Though these scenarios present two very different outcomes, it's important to stress that the proposals for a mansion tax have attracted criticism from a wide range of sources. There's therefore a significant chance that even if the parties supporting them form a majority government, they will be watered down. If, instead, changes were made to council tax with a far more modest increase in the tax liability, the performance in the market would again be likely to reflect the underlying fundamentals of supply and demand.